Welcome back to the Clear to Close podcast. Please remember to like, subscribe, and comment. Today on the podcast, we have Ginger Vining joining us. Ginger has been in the banking industry since 1992, bringing over 3 decades of experience to the table. She specializes in home equity lines of credit, home loans, and refinancing. Ginger is also actively involved in her community, serving on the advisory board for the Boys and Girls Club of Claremont County. A 4-time recipient of the 5-Star Mortgage Professionals Award. Her dedication and knowledge make her an invaluable guest. So welcome, Ginger.
Well, thank you. Thanks for having me.
Yeah, welcome.
Of course. Can you just start off by telling us a little bit about yourself and what you do?
Sure. So I've been with Park National Bank. Well, I've been a lender for over 30 years now. So mortgage lending is my specialty. Do a lot of purchase lending, construction loans, renovation loans, bridge loans, blanket loans, equity loans. So, as a bank, we're able to provide many services to help people.
Awesome. And you've had a long working relationship with us here at TechneTitle. How did that relationship first get started?
Sure. So when I first started as a lender, I started with Claremont Savings Bank, which was actually in this building on the first floor. And part of my process, what they had me do, because Dan Early and Mike Jakunski had a relationship with Doug Thomson, nice working relationship, part of our process was to send our orders to TechneTitle. And that became part of my process. Sort of easy. It's something that I do every day. I know that when I send my title orders here, I don't have to think about them anymore. So it just became a part of something that I do every day, and I'm very comfortable doing that.
Yeah, because that's an important distinction. The borrower or buyer always has the choice because they're paying the fees usually, right?
Yes.
So they always have the choice of the title company that they want. Now, that being said, I know that realtors and lenders will say, I've worked with these people before.
Absolutely.
And they're a known quantity, and I always have gotten X, Y, or Z service. And in the event that there's been a problem, this is an example of how it's been resolved. So at the end of the day, if you're buying a home, if you're selling a home, it's always important to know you have the choice, but you might want to rely on those people that you've trusted and put around you that do this every day to figure out who do you trust. And then on the flip side, it is kind of similar with realtors and loan officers. They can suggest things, but at the end of the day, as a buyer and seller, you take that as a factor in selecting who you use as a realtor, who you use as a lender, who you use as a title company, home inspector, whatever it might be, because at the end of the day, it's your house that you're buying, it's your money, it's all those things.
It is. I mean, everything that we do is relationship driven.
Yeah.
Right.
And, part of a relationship is trusting in the people that you work with. And, so I've always trusted in TechneTitle, and I know that when I send things here, they're going to be taken care of. And, so hats off to Joy Carver, which Joy has been here for
37
years.
Yeah.
So as long as I've been doing this, and it's just become part of my process.
Absolutely.
I take my mortgage application, talk to my customer, and if they don't have someone that they're already that they have a relationship with, then my suggestion is TechneTitle.
Yeah, absolutely. Because over the years you've worked with different title companies.
I have.
Probably everyone in this city, maybe in multiple cities.
Many, and it's not of, good job, bad job, whatever. This is just comfortable for me. This is part of my process.
Yeah, and I'm sure you've had good experiences with other ones, bad experiences. I'm probably with us at some point, maybe not necessarily because we did something wrong, but maybe just because it was a rough transaction, right?
It can
Something
be.
happened. Because it's real life that we're dealing with people, right?
It is. And the one thing that I trust in this process is that if there is a problem, it's identified early.
Yeah.
Right.
Which gives plenty of time to fix it.
Especially in a purchase. Time
Yes.
is super important.
Yes, it is.
Follow-up question to that. So I am very new to this industry, right? And so part of the reason I felt like we needed to do this podcast is to get some of these stories and experiences out of allowing people to understand why it's important to work with professionals and people that have a vast experience in the industry and in these areas. So home buyers, people understand the value that we bring to the table. Do you have any stories or examples of pitfalls people have fallen into if you aren't working with people that have that experience in the industry?
Well, I mean, I'm not going to say people are inexperienced or anything like that, but some of the great experiences that I have had is, life happens. So let's say something happens and a seller can't make it to the closing table. TechneTitle's actually gone to their homes for signature. They've gone to hospitals.
Yeah.
They've
Went to
gone
Louisville a couple weeks ago.
Yeah, nursing homes. I mean, just things happen,
Yeah.
right? And so to get that signature or to clean something up, those are great experiences.
Yeah.
And I mean, the other thing is the title company is the last part of that transaction. And so, their closing is, I mean, they either get up from the table with a good feeling or a bad feeling.
Yeah.
And I want them to walk away with that good feeling.
Yeah, and a shameless plug for anyone out there that's watching that's a lender, do what Ginger said and get it to us early.
Yes.
Right? Because if you wait, like some people will wait till the appraisal comes back.
Oh, no.
And
it's one of the first buttons we push.
if we have to cancel a file, we have to cancel a file because something goes south. But it happens all the time. It doesn't appraise, people lose their jobs, whatever it might be.
Correct.
Get it to us early. And that way, if the title has a problem, then we can work to fix. We have the time to fix it. It's like one creditor, for example, it takes at least 3 weeks to get a payoff. And what's the average contract time?
Less than 30 days.
Yeah,
Yes.
about 30 days. Yeah. So, I mean, if you get it to us 2 weeks later, we've already missed contract if
Correct.
that one comes up.
Yeah, I mean, one of the things that come up that you guys do a great job with is like state or federal liens.
Yeah.
Those take a lot of time. And sometimes, I mean, they don't belong to the person that we're working with, but you still have to go through the process of clearing that.
Right?
Yeah.
And we're hoping the state will get their stuff together and get a little faster at it. There's a really, really what I would consider dumb reason why it hasn't been done. And Ohio Land Title Association's working with a few different industries to try to pressure them to speed up their process. But that's another story for another day, maybe.
Sure.
So stay tuned. Maybe we'll have another one in the future about something like that. Do you have a golden rule with your clients?
Just the basic golden rule. Treat everyone with respect, do the right thing. I mean, my golden rule is, just to be the best that I can be every day. And if I'm the best that I can be, then I'm doing the best for the people that I work with.
Yeah, absolutely.
Yeah. So if there are people that are out there considering, buying a home in the future, they know they're going to have to get out, get a loan, go through that process. What are some of those common questions you see that clients have, and what are some things that people should know if they're considering starting this process?
So the first thing is to choose a lender and gather all of your documentation and get it to that lender. Okay, I mean, we need that documentation. We need income documentation. We need asset documentation. We need to look at all of the pieces of the puzzle to figure out the best product for that person. Not all products are the same.
Yeah.
Not everyone fits in the same box. So gathering all of that information and knowing, who that you're working with helps us decide what's the best product for them.
Yeah, because at the end of the day, a lot of loans, some loans are what's called portfolio loans, right?
Yes.
You guys keep them in the bank, right? The bank
We do.
holds them. No one really ever sees them other than maybe auditors and stuff like that. But the large majority of the entire market is through Fannie Mae, Freddie Mac, the securitization, mortgage-backed securities. It's all fancy stuff that you can look up if you really want to. But basically, it's being sold and traded on the open market as basically almost like stocks. And so people are buying and selling those loans, and there's a lot of people, and they all have different regulations, but there's overarching regulations and that you have to go by if you know that loan's going that way.
Correct.
Right? And so regardless of whether you might think, I think this is going to be a good loan, you can't just go, I think this is going to be a good loan. You have to actually prove it.
Correct.
Like the fog up a glass rule back pre-housing crash. If you could put the mirror over their face and they fogged it up, they got a loan. It's not like that anymore, is it?
No, it's not. So we have to establish the ability to repay. So we have to get that income documentation. We're looking for pay stubs, we're looking for W-2s, we're looking for federal tax returns, and all of the schedules. So sometimes it feels like maybe we're asking for too much, but we actually need all of that.
Everything but the firstborn's blood type, right?
Yes.
So speaking of that, so what are some of the challenges you see people run into trying to get approved for a loan?
Well, people can have different challenges. I mean, the best thing is that pre-approval process. That way we can identify if someone is having a challenge. We like to look at things. Some people aren't ready. So we don't like to say no. We like to say not now, and here's the things that we need to do to get ready. So working with the lender and doing that pre-approval process, if you do have challenges or things that we need to work on, we can identify those, take care of those, and get them to the finish line.
Giving them like a roadmap to
Yes,
say,
absolutely.
maybe you can't do it right now. However, I'm not just going to say, so sad you can't do it right now. Call me when you can.
We're going to come up with a plan.
Yeah, absolutely.
Do you have, I don't know if you can talk about it, but do you have an example of maybe somebody that wasn't ready, but you were able to get across the finish line?
Well, I mean, a basic example is maybe credit. There may be something out there that we need to remedy.
Yeah.
A lot of times people don't know what their credit looks like. They don't know what their credit scores are. Some people have no credit, so then we need to establish that. So we're looking at everything, trying to figure out self-employed borrowers. You need 2 years of tax returns. Maybe someone just started a business or they've only had 1 year of tax returns. So things like that, we need to identify those things and figure out how to move forward.
Got it.
And I'm not going to let you leave without talking about construction loans, right?
Oh, yeah. I love construction loans.
Tell me how that's different in the loan process, but from your perspective, right? There's a lot of things that go into a construction loan, but from your perspective, how that's different.
So, I mean, you're working with the borrower, you're working with the builder, you're putting the numbers together. Those construction loans, sometimes people are buying their land when they're closing their construction loan. Sometimes they already own the land. But just putting all those puzzle pieces together. But the way a construction loan works is, that first 12 months is interest only. So we establish a piggy bank. We hold that money for the builder. And then there's a draw process. Every time there's a draw, we send an appraiser out to verify the percentage of completion. And then, we have to have the homeowner authorize the draw. But there's a process that we go through to make sure there's checks and balances, that we're not upside down, that kind of thing. And when that's done, then that would typically roll to that amortizing loan where they start making payments. But just a lot goes on during that building process.
Do you recommend people build in a little bit of a pad in their construction loan so they can make changes?
We do.
Yeah.
We do. Yeah, you need a little bit of a cushion because things sometimes do cost a little bit more, or maybe you see those awesome cabinets that you have to have that weren't quite in the budget. So,
Right.
What are some of the best practices to ensure the buying or selling process goes smoothly from your perspective?
being prepared. So pre-approval process, gathering all the documentation from my end, having that relationship with a good realtor to where they know what price range that the borrower should be looking in to help them identify that home. So it's just being prepared, really. If you have everything done ahead of time, it'll go very smoothly.
When you say everything done ahead of time, what does that mean?
Well, on my end, it means that I have income documentation, I have asset documentation. I mean, we're ready. If I pre-approve someone, they're good to go. I've looked at their income, I've looked at their credit, I've looked at their assets. So we've identified all of that. So when they go to write a contract, we know that will close.
It does feel like a common misconception where, some people say that the pre-approval is only worth the paper it's written on these days because there's so much post-contract documentation that you need. That's not entirely true, is it? I'm sure maybe with some lenders it is. They do just a off the cuff, quick look. But for a trusted lender, that a pre-approval is pretty valuable, isn't it?
Pre-approval is very valuable, and there are different levels of pre-approvals, maybe a pre-qualification instead of a pre-approval. So a pre-qualification could be done just based on an application that's been filled out, maybe nothing really documented. Credit should have been pulled, so that's one identifier right there, but maybe they didn't get pay stubs. Maybe they didn't get bank statements to make sure that the assets were there. Doing all of that ahead of time, you can identify if there are going to be any problems.
Sure. And then your contingencies, other than, the people not losing their jobs or going buy a boat on credit during
Sure.
the closing process. By the way, that's of all the things that I've learned over the years here, it is don't buy anything or take out any new credit cards while you're in the home buying process unless you've talked with your realtor and your lender and made sure that that's not going to be a problem.
Right,
Don't do that Kohl's card to get your
Yep.
10% cash back.
You're pretty much on credit lockdown. Put your debit card away, save your money until you get to that closing table.
Buy your groceries, fix your car if you have to.
Right.
Those types of things, right? Yeah.
So for people looking to start this process, getting pre-approval is a big step, and that will enable them to go. They'll know how much they're approved up to.
Yes.
And then they can go and work with a realtor to find homes in that price range, right?
Right, and they'll know what type of financing they're qualified for. So that's a big thing as well. When the realtor's filling out that contract, they have to say, are they doing a conventional type loan? Is it a government type loan? FHA, VA, USDA? Are we using down payment assistance? Are we going to use OFA, which is Ohio Housing Finance Agency, and get grant funds that can be used for down payment, closing cost? Park National Bank has their own product. It's called Home Sweet Home. And that's a product that we use to where that the buyer can do no money down. And then we also offer a second mortgage that they can use for a down payment, closing cost, home improvement, maybe some debt consolidation if we need to get that debt to income ratio down just a little bit. So that's a product that we have that if someone fits into that category is very helpful.
Sure.
So-
and when you've got home buyers that are current homeowners and they're looking to transition to a new home, whether that's an upgrade, downgrade, whatever, in terms of price and size and whatnot, due to usually a family change, maybe a work life change, what are the normal things that someone can do? I mean, I know you hear bridge loan and lines of credit, whatever.
Right now, we're doing a lot of blanket loans, okay? Sellers are not wanting to take contracts with contingencies upon a sale, right? And so with a blanket loan, I'm able to allow the current borrower to keep their current home loan, which probably has a nice low rate on it, right? And then I just use that home as an abundance of collateral. So I'll put a second mortgage on that home, and then when they sell it, we do a principal reduction, and then we can re-amortize and recast their payment.
What's a recast?
Once you make a principal reduction, your rate doesn't change, your term doesn't change, but your payment will change based on the new principal balance.
Sure.
So
Yeah,
it's very
absolutely.
nice.
I've gotten that question in many a closing, and I explain it to them, of course, but that's, you're the one that actually knows how that, because each lender, I'm sure, is a little different on whether they offer them and those types of things. But
Well, Park National Bank services all of their mortgage products, so we're able to modify that loan.
okay, so you get to make that call.
Yes.
Versus Got perfect.
it. Getting back to pre-approval. So if someone doesn't get pre-approved and they go out and try to, put an offer on a home, what pitfalls are they going to run into?
Well, typically, from my understanding, that offer is really not looked at without a pre-approval. Realtors are, very good about asking for that pre-approval letter.
Right.
They don't want their sellers to take their home off of the market unless they know that that borrower's been pre-approved.
Being pre-approved and what type of
Yes.
loan that they're going to be using there as well.
Because every contingency, which is just a fancy word of saying how you can get out of a contract, right? Every contingency has the potential to limit the attractiveness of the offer, right?
Yes.
Now, some people think like certain types of loans are just not as attractive, and that may or may not be true, but they're looking at the overarching, they don't know that person from Adam, right?
Correct.
And so they just have to go based on the paper in front of them and say, well, that's a
Well,
different...
and at this time, inventory is very low.
Yeah.
So chances are, when you're writing an offer, there's going to be other offers as well.
Right.
So they're just laying them all out, and they're looking at, okay, which one looks like the best one and is the most likely to close.
So like likeliness to close, meaning, so it's like a VA is going to have different things that need to happen for that loan to get there, opposed to a conventional loan. Is that true? And
VA is a different process.
Yeah.
I wouldn't say that it's any less attractive.
Okay.
I mean, the veteran has earned the right
Mm-hmm.
to borrow money and use that VA loan. We typically, we don't have problems doing VA loans. But if you have a cash offer and a VA loan,
yeah.
someone is going to choose the cash offer.
All things
But-
being equal,
but
right?
They would do that if it was a cash offer against a conventional
Conventional loan
loan.
as well.
They're just looking at, what's my best path?
Yeah.
And they really don't know. They don't know the people. They don't know their qualifications or anything like that. They're
Right.
looking at a piece of paper.
Yeah.
Yeah.
Being in the industry for 30 plus years, what has changed, and how do you stay up to date with all the changes?
A lot of change. Right now, in the last couple of years, we've had a lot of change. We went from a low interest rate environment to a high interest rate environment, which has caused a lot of fluctuation in the market. Just being prepared, staying on top, knowing your products, knowing the rates, getting to know your borrowers.
Yeah.
Yeah, and that's...
There's really no secret sauce to any of it.
Right.
It's just showing up.
Yeah, and you guys do this every day. So, for example, knowing the interest rate, you're a lot more likely to know what the Fed rate is right now than I am, right? Because you look at it. It's what you
It's just
do.
what you do every
Right.
day.
Yeah.
So
So, yeah.
nothing special.
Yeah, so that I think as a buyer, that was always important to me when I'm going and I'm reaching out to a loan officer for a loan. It's like, all right, what do you think we're at? What are we at right now? Like if I close today, and do you have a pulse on what it might do? Right, it's always a guess.
It's a guess.
Right, the only ones that know are the ones in the Federal Reserve.
Correct.
Right, but what might it do? And that way you can say, am I under pressure to buy right now, or do I want to wait? And that's a personal decision, but they can go to you or their lender or whoever it is, and their professionals to help them make that decision, to get the information that then they can make the decision based
Right.
on.
Yes.
Yeah.
Yes,
Yeah.
it's all about information gathering.
Yeah.
And then making the decision what's best for you.
Yeah, because at the end of the day, we don't make decisions for anyone there.
We
We
do
tell
not.
them what we can do and how that's going to pan out for them in terms of whether it's their monthly payment, whether it's their term of their loan, how likely is it to close, et cetera, those types of things. We can tell them that, and then they, once educated, can make an educated decision
Yeah.
rather than just guessing.
Half the battle is knowing the questions to ask, and hopefully this podcast will provide people insight so they can ask those questions to gather the information that they need to make the best decision for themselves.
Yeah, and I'll put a little bit of a shameless plug in here is when you're a buyer, and you'll probably end up wiring funds to the title company, not to the lender. Some people don't even actually realize that there's a difference between the title company and the lenders. It's interesting how many times I've gone in, like, you're with the bank, right? No, I'm a service provider that is handling the closing. We're a separate company.
I had people ask me if they could change the terms of the mortgage. I was like,
I do love
no.
that. Yeah, people that try to strike things out. And unfortunately, those Fannie Freddie loans are pre-negotiated
Correct.
with all the wonderful people in Congress and big ivory towers, right? So you can't really change those. You can agree whether you want it or not, but you can't change the terms of the loan. But one of the things that is going to come up is wiring funds. And you guys, meaning lenders and realtors, are out in front of it. You guys have primary contact with your borrowers or your buyers or your sellers. Can you speak to kind of how you warn them of the people that are trying to come into our industry and steal people's hard-earned money, trying to get it to the place it's not intended.
Well, I mean, we do tell them that wire fraud is real. I mean, it can happen. It does happen. I make sure that they contact the title company directly. Don't call the phone number that's at the bottom of an email, because if someone's scamming you, they've got that perfect email with the perfect letterhead and maybe a phone number that is one digit off. So if you call that, you're talking to the criminal, not the real title company. And of course, they're going to tell you their wiring instructions are correct. So, you Google the title company to make sure you have the right phone number. You verify that phone number with your lender. You call in, you talk to the title company directly. We typically give them a name, someone to ask for.
Heck, show up at our office.
Yeah.
9 to 5, Monday through Friday.
Yeah.
We're not going to be here at 9 p.m. usually.
Make sure that you're wiring the funds to the right place.
Yeah, because, people don't understand, as far as doing a wire, it's settled basically at that time. It is possible, but much more difficult to recall a wire. So if you send it to the wrong place, it is most likely gone.
Well, and more than likely, you wouldn't even know that you sent it to the wrong place until it's too late, because you typically have to wire that money the day before in order to make sure that it's there ahead of time. So it's already gone.
Yep.
We had an incident where it wasn't our transaction, but I received a call, and it was they wired their funds in. They didn't get verification from the title company that it had been received. And then this was on, I think, a Friday or something like that. And on Monday, they went to the closing and they said, when are you wiring your funds, basically? And I think it was even after post-closing when they actually found that out. And they said, oh, I already wired them. And so you got to think, we're Friday, Saturday, Sunday, Monday. This money's seasoning in wherever it's at. And turns out it had been absconded with. They had hacked, they had sent an email pretending to be someone. They had not done the exact proper method in terms of verifying the wiring instructions, and they sent their money to the wrong people. The FBI does have a kill chain, they call it. So typically, not guaranteed, but they say 72 hours is your best chance of recovering your funds. And if you don't get to it in that window, you may or may not get it back. If you do get into that window, you have a higher likelihood. And in this case, I believe they got, if not all of the funds back, most of them, because they fell outside that 72-hour window, but they ended up getting their money back, and that was good.
It's a scary thing.
It really is.
So here's a question then: why do we require wires? Why is that the mechanism we use?
It's state law is the easiest answer, but behind the state law is that there were, you hear anyone that's been in the business a long time, the cashier's check was the standard, right? Or the check from the one title company when you sold, and then you take that into the new title company, and it's already either made out to them or they sign it over to you, right? Well, there were a couple things happening. One, there were a lot of real cashier's checks being taken, stolen, and they were using them and not putting official signatures on them, doing all that type of stuff. Another thing was they were taking these title company checks, and now what can you do with your phone? You can remote deposit checks. Then drive into the next closing, they remote deposit it on their phone. That check's already been negotiated, and the money's going to that person who is a seller on one, a buyer on the other, rather than going to the title company who's going to apply it to their proceeds. So they're getting their cake and they're eating it too, right? Well, at the end of the day, the lawmakers said there can't be this much risk in the system, right? Because this is not found out for quite some time. And so they said, we're going to change it. We're going to require wires of the funds because it's immediately available.
Yeah.
Funds. As soon as it hits, that money can be used on that next transaction. It's not going to be called back except for by the Secret Service or FBI.
Yeah. So yeah, that's for us, the settlement agent, we know that we've received those funds and it's not going to be recalled, so then we can disperse in accordance with that settlement statement and everything else. So, wire fraud's a huge issue. Their scammers are getting more and more detailed, savvy in how they're trying to go about this. And so, exactly what you were saying, Ginger, is people to be, it's something to be aware of and to know what to do to protect yourself, which is call the title company or whoever you're wiring the funds to ensure that you have the correct wiring instructions.
Yeah, and you guys,
Absolutely.
since you guys are out on the front edge, I know you guys have these conversations with
Yeah.
your borrowers, and realtors should be or do have conversations with their clients to basically say, don't just trust an email. Right.
Well, and honestly, I mean, I tell them, to call themselves,
Right.
That way they have done their research and they know that they're talking to the right people.
You must have played that game of telephone in high school too, or probably not high school.
Pass it off.
You
Yes.
whisper in someone's ear, and then they say what they heard and what they heard, right?
Mm-hmm.
And at the end of the day, you're just going to get the wrong information at the end of the route.
Correct.
The best thing that can happen is you get the right information from the wrong people, and then the worst thing that can happen is you get the wrong information from the wrong people, or even the right people.
Great. So as we wrap up here, Ginger, turn it back over to you. What is one piece of advice you would give to somebody who's looking to buy a home in the next 6 months, let's say?
Do your homework. Get your pre-approval. I mean, go ahead and do it now. People ask me, how long is my pre-approval good for?
Yeah.
Okay. Well, technically, your credit report's good for 120 days. Okay. But your pre-approval is numbers. As long as those numbers don't change, unless there's something major that happens, you change jobs or you buy that boat or something like that, your numbers are not going to fluctuate. So your pre-approval is still good unless something major happens. If someone calls me 6 months later and says, hey, I found this home, first thing I'm going to ask them, are you still at the same employer? Has anything changed? Is your income still the same? Have you bought anything? So that I can work those numbers for them and make sure that they're right.
So get that pre-approval, and then taking out new debt or anything else is something to avoid in this time as you're even thinking about looking potentially.
Most definitely.
Yeah.
You really just don't want things to change. I mean, things sometimes inevitably happen, right? But those things are what can adjust what you can qualify for.
Got it. Well, awesome. Well, thank you for joining us on the podcast, Ginger. It was great to have you.
Thank
and
you.
Amazing insight. So thank you for watching the Clear to Close podcast. Please remember to like, subscribe, and comment. Thanks.
All information provided in this publication is for informational and educational purposes only, and in no way is any of this content contained herein to be construed as financial, investment, or legal advice or instruction. TechneTitle Agency, Inc. and the guests appearing on this podcast do not guarantee the quality, accuracy, completeness, or timelines of the information in this publication. While efforts are made to verify the information provided, the information should not be assumed to be error-free. Some information in this publication may have been provided by third parties and has not necessarily been verified by TechneTitle Agency, Inc. TechneTitle Agency, Inc., its affiliates, and subsidiaries do not assume any liability for the information contained herein, be it direct, indirect, consequential, special, or exemplary, or other damages whatsoever, however caused, arising out of or in connection with the use of this publication or in reliance on the information, including any personal or pecuniary loss, whether the action is contract, tort, including negligence, or other tortious action.